Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. We've got a lot to talk about today, so buckle in. It should be a good one. I don't expect this one to be under an hour, but who knows? And if it goes a little bit over, that will be quite all right because there is plenty to talk about. No better time to analyze the markets than when they are moving, and that's when we can really whip out our tools from our different tools from our tool belt to see exactly what is going on when the market's just flat and moving sideways. There's just not a whole lot you can do but wait. And then once a apparent break of a market structure occurs, then it is time to really pull out the magnifying glass. And matter of fact, maybe I should go ahead and throw on the glasses for today. So we're going to be taking a very close look at these markets and want to make sure that we don't miss anything. So, all right, ready to go. Going to go ahead and throw it on screen share. And it looks like the stream is running smooth, so that is good to know. Keeping my eye on the comments. See Fibbo Swanee in there. I'm glad to see him. Looks like he's providing some analysis in the chat, so that's always great. Much appreciated. And we'll do my best to keep an eye out for any questions, that sort of thing. And we'll be keeping my fingers crossed that these streams continue to operate as they should. So let's go ahead and just start with a little bit so a rule of thumb that I have for sure is that when markets are moving fast, it's a good time to zoom in. When markets are really volatile, there isn't a whole lot that you can tell from like the 4-hour or the daily and sometimes even like the hourly. So that's when I will definitely be zooming in to the 15-minute, even like the 3 minutes to really get a much closer look. And that's why we might need the glasses when we're looking at such small time frames. But let's go ahead and start with the 4-hour, see what we got there. Because this is kind of the last area where I could see a bullish argument being made for the short to medium term is if we are able to find support above 9,500. Right here is the recent swing low, and this does have a potential for a Wyckoff accumulation pattern. That's why I will be watching this area very closely. If we do break down below 95 and quickly pull back up to 10,000, and really let's say 10,200, we want the middle of the trading range is where we would want to see it pull back up to, which is right there. Okay, so if it does fall below 95 for just like an hour, 2 hours or less, and then it quickly retraces back to the middle of the trading range, then we would have a pretty ideal candidate for a Wyckoff accumulation with this acting as the spring. So that is the last thing that I will definitely be paying very close attention to from the bullish perspective. If we can take out 95 and spend 3-4 hours plus below 95, then I will be taking this off of the table. And I do view this as a very low likelihood. I don't think that this is a Wyckoff, but if we fall below 95 and quickly retrace back to 10,200, the only explanation in my mind would be that this is a Wyckoff and that was a spring. So again, I'm not expecting that, but I'm always preparing to see when the market might turn around and slap me across the face when I think it's going in my favor. So that would be the area, is a retrace back to the middle of the trading range after an apparent breakdown with the lowest close that we've had in this. That's one of my best ways to identify traps, is that if it quickly returns to the middle of the trading range, then you can absolutely go ahead and strongly consider exiting positions and expecting some sort of continuation to the upside. So that is the one last thing that is maybe concerning me, and that is a good thing to talk about before moving on, is that if you are short and now you're in a pretty good amount of profit, it could be time to take partial profit, depending on how you like to trade. I often like to take partial profit if I'm short at support, if I'm long at resistance, because that can really help to ensure that positions are profitable. So right now, a very, very solid option would be to trim 25 up to 50% of this position. Go ahead and cover 25 to 50% of this position, and then move the stop loss to break even, which for me, I think would be right in here, right around 10,330 or so, because again, that would be, I definitely do not want to see the price retrace back up to that area. That would be a strong indication that this was a fake breakdown and we're going to go up. So moving my stop loss to there makes a whole lot of sense. So you kind of having the two options of moving the stop loss to break even and holding on to the whole position, or moving the stop loss to break even and trimming 25 to 50% of the position. If you do the latter, you're guaranteeing yourself some profit, which is often a really, really good way to go about it when a position has started to move in your favor. If you trim 25%, you've still got a good amount of your exposure. You move the stop to break even, and now you're very happy camper. You just if it keeps going down, you've got good exposure. If it comes back and takes out your stop, well, heck, you just made a little bit of money shorting Bitcoin in this really kind of difficult environment. So that's definitely a really, really good way to protect risk and protect unrealized profits, and then also give yourself a chance to let the trend continue moving in your favor. All right, might as well just take a look at the daily, see what we ended up with yesterday. Stream is loud and clear and fantastic. Excellent. Is this a buying opportunity? Let me make myself a note. If you just heard what I was saying about covering a short, that should give you a good idea into what I would think is if this is a buying opportunity. If I'm holding on to a large majority of my short or all of it, it probably shows you that it's not, but I will try to touch on that, because that is the thing, is that everybody likes to talk about buying the dip, and it's like the cool thing to do, right? You go onto Twitter and you say, hey, I bought the dip, but nobody really knows how to buy the dip. A lot of people just think, oh, the price is going, Bitcoin is in a bull market and the price is going down, so I buy. Yahoo. That is definitely something that that's an area where a lot of people could potentially improve. And while we're on the topic, I might as well just go ahead and show the article that I put together about that very quickly. If you go to any of my TradingView posts and you click on a post and then you come look for Sawcruhteez strategies at the top of every post, and then how to buy the dip. So give that a close look. If you're wondering about buying now, you're wondering maybe why I'm not buying now, or you're maybe wanting to challenge just your perspective to get a little bit better idea of if your approach is valid, if it's telling you to buy the dip. It could be a good idea to go ahead and give this a read. I went through two strategies for buying the dip, one with moving averages, one with trend lines, and Bill Williams fractals. So go ahead and give that a look. And it's nice how TradingView has these dots which show the neutral is yellow, green is buy, and neutral is yellow, red is sell. It's nice that they keep those on there to kind of keep you accountable, and then sometimes it looks awfully nice looking back in hindsight. So don't mind me if I toot my own horn a little bit. That's just to be expected in Twitter and TradingView and YouTube world. So here we go. I've seen a lot of people drawn this as a descending triangle, and it kind kind of looks like that because you get these two nice touch points here. But being that this didn't come back to test, this found a higher low. I really do think that this is a symmetrical triangle. Let's go ahead and make it blue. And we can use that to measure a move. Price range. So that's about $4,000. If this is a real breakdown, which there's the last area, this is the last chance, in my opinion. We should know if this is real within the next 12 hours, as far as I'm concerned. If it is, then this symmetrical triangle would provide a target of about $6,000, which is very interesting. We all know the horizontal that will be waiting at 6,000. That makes me want to go ahead and throw on the visible range volume profile. Let's see if we've got a gap in volume, which suggests that that might be a target that's confirmed. Go ahead and zoom in. Really no gap in volume, so that's interesting. Very good to know. If this was a big gap right here, something like that, that would be very good for me to know. But now everything's still looking good. My original target was about 8,000, 75 to 8. And this big volume at that price gives me confidence that there will be a good amount of support there. What else can we look at on the daily? So if anybody takes a look at that post for the how to buy a dip using moving averages, if I was going to be buying this dip, then here's my target entry, 200 EMA. And something that I love so much about using EMAs as areas to buy dips is A, they are often very, very strong areas of support, and B, I like how, so say back in here you're wondering if I should buy the dip and what prices it should be. As price goes up and continues to increase, your offers need to continue to increase as well. Your bids. You need to move up how much you're willing to pay, how much you're going to put in to buy a dip as the price continues to move up. So that's what the moving averages do a very good job of, is showing that as price continues to go up, here your area of support continues to move up. So this is the main reason why I've been looking at 8,000 now that it's moved up over the last week or so. That does get adjusted to about 84 or so, which is in line currently with a horizontal. So since I'm short, this is where I'm going to be looking to cover, and then I'll wait for further confirmation to enter long. That is my preferred method. But for those out there who just really are in love with buying the dip, this definitely is a very strong candidate for where to set up some orders. And again, I would, if it were me, I would just kind of scale them down from 85 down to 8,000 and try to build a position somewhere in that territory. Okay, anything else on the daily that we can look at? Get out of here, out. Let's just throw on the TD, and definitely want to take a look at the average directional index. Oh, good to know that this TDST level, Tom DeMark setup trend line, is coming in right where we're testing now. That has been very significant in the past. Time and time again, support will be found at these TDST levels. We did get a beautiful entry there, a 2 below a 1, right as that boundary was breaking down. So now we will want to watch for this holding as support. And as we zoom in, I want to notate areas on higher time frames that are important. So what we'll do is something like this. 1 day TDST, Tom DeMark setup trend. And we'll probably want to make that smaller. Make sure it's the same color. And Now we are pretty much ready to go ahead and zoom in. Nope, not even close. Need to look at that ADX and also want to look at the RSI. So I use ADX and DI with 26,000 likes, Masa Nakamura. And let's go ahead and get this silly stochastic out. That thing's not good for much as far as I'm concerned. So interesting. Notice how on the daily, the ADX is just getting ready to cross 20. A lot of people may be wondering, so like for example, the question, is this time to buy the dip? Is this where the trend is getting exhausted, or is this where the trend is starting? ADX says that the trend hasn't even really started yet. We haven't even broke through 20 just yet. We haven't seen as much of a divergence on these DIs as I would like to see. We still have a few hours left in the day, so we'll see how that develops. But would really like to see this thing crossing through zero just as that 95 to 96 is breaking down. That would be strong confirmation that my read is right, that the last area that the bulls can support this thing is at that 9,500 area. That is what this is showing. This is showing that this still could be a fake out, being that we haven't broken through 20. It says that we're not in a trend yet, that we are still in a range. And that does make sense because notice how if you're just going to draw horizontals, we are still very much inside of these horizontals. Let's get that out of there. Like so right in here. So that's kind of what the ADX is looking at. And if we can break down that horizontal, now it will say we're no longer stuck in this range. We are ready to trend. So the AD and then the RSI, taking a look, it is also in agreement. Remember yesterday we looked at using it to be a leading indicator for boundary breaks. It was in a very similar symmetrical triangle, at least on the 4 hour I think we looked at, and before the price broke down the symmetrical triangle, or apparently, still time for it to rebound, but before that apparently happened, the RSI, what did it do? It broke down that boundary and it also resisted a throwback. So if you're interested about using RSI as a leading indicator for boundary breakthroughs, go ahead and take a look at that video from yesterday, and we might be seeing something similar today. So this is kind of what I'm talking about, how it's fun to analyze charts when markets are really moving, because there's a lot to look at and a lot that can kind of jump out at you as important details. And when I'm doing these shows, I'm generally analyzing the charts live. I'm not really usually having enough time to do all my analysis up front and then come in and kind of repeat it. So I'm generally looking at these charts very fresh as I am today. So it is a really good way to learn when the markets are moving and seeing what, this is how you build your tool belt, how you build your hierarchy. When you have a number of indicators, you need to know where do these indicators fit and when are they most important. When we're stuck in a range, what indicators should I be using? When there maybe is a fake breakout, what indicators should I be using? That sort of thing. If I'm wanting to determine exhaustion versus strength, what indicator should I be using? If I'm wanting to buy the dip, what indicator should I be using? All these things you will develop a feel for only through experience and through time and through actually when the markets are moving, instead of being all panicky and emotional like everybody else. If you're sitting here calm, cool, collected, going about your process, knowing exactly, ooh, it's time to pull out this indicator, ooh, it's time to hammer that nail, that's when you can really start to gain an edge, because when markets are moving, that's when everybody's emotional and making bad mistakes. And when people are emotional and making bad mistakes, that's when there's an edge to be found. So what do we see here? You heard me at the top worried, and I still am a little bit, about 95 holding as support and turning this into some sort of Wyckoff accumulation. The RSI is suggesting that isn't the case. It has been in this support at 42.83, and it just now looks like it's breaking that down. There is still time left in the day for us to reverse to the upside, and this hasn't closed, so it could still just move right back up and leave no trace of it being down here. If it closes back up here, it won't have any trace of this being down here. So that's when I would want to definitely zoom into the 4-hour and see what that may be showing. And that is interesting. So it isn't shown as clean of an area of support, but we did create a new low below here, which the price has as well. So I guess that isn't that interesting. Isn't really telling us much. What we would want to see is a new low below right here, August 19th, and that's definitely not happened. Okay, so now that we have looked at everything from a higher time frame, I guess we'll just throw it on the weekly really quick just to see if there's anything. Yeah, definitely something. We took out the low of last week, failed to break through the high of that, so we created a lower high and a lower low from that candle, and now we do see that the low of the wick from just before is very much lining up with the areas of support that we had drawn. So maybe we can make ourselves another line right here and say weekly support. Okay. Yep. So definitely big areas of support right here. This is absolutely where the bull's last stand, if you ask me. This is where it would need to be. If we're taking out these lows, then I would be very confident this is not a fake breakdown. And I don't think there's anything more on the 4-hour that we need to look at. Okay. And I really don't even need those labels now that I've got it in my mind. I think that's making it a little confusing, so let's just zoom right on in. Why is this chart so stinking small? I mean, this is just, seems like it's tiny. Okay, so the 50 and 200 EMAs are not going to be all that useful, excuse me, on the higher time frames when markets are really moving. They are very useful to identify potential swings and potential reversals, that sort of thing. And I just cannot understand, this chart is stinking tiny. It's not, it's like it's on my screen. It's not like it's just the YouTube screen. Let's just go ahead and refresh this. That is really weird. Okay, so yeah, those 50 and 200 EMAs, they're gonna help us identify areas of support. I just don't know why that chart is so small on the top. It doesn't make any sense. But if we didn't have technical difficulties, we probably wouldn't be having any fun at all. So let's go ahead and go back to BitMEX. So like I said, on the higher time frames, we use the okay, let's just go ahead and we use this 4-hour to identify our entry and also to identify our stop loss. But now these aren't that useful. The price is pretty far away from them, so there isn't really much use for these as the price is down here at 96. It's like, okay, they're back up at 10,200 in that confluence of resistance. Doesn't help a whole lot. Was watching the 8-hour yesterday. Let's take a look to see if that death cross came in, and it did not. So that would be another one that I will be paying attention to. That death cross would definitely be kind of the next domino falling. But in terms of trying to analyze the short-term price action, I'm going to need to zoom in to get an idea for basically how far away is the price from these moving averages, right? So you hear Tone and myself talk about, right here we had a golden cross, which was a fake out, a trap, and then this death cross didn't occur until this candle closed. And you hear us talk about you don't sell death cross when the price is this far extended below. And as a matter of fact, you can almost counter trade that. When the price is this far below a cross, you just really would expect a bounce back to at least retest prior support for resistance, which is absolutely what I'm expecting. And what I would really want to see from here is a bounce up to 10,000 and resistance, sharp resistance, and then the next big leg down. So something along the lines of and then another one like this. And I wonder where that would get us to. Won't let us zoom out enough. I'm going to have to blow it up 1 second. That would get us to 91.78 would be the target of that swing move if this does all come together perfectly. If we bounce to 10 and resist that sharply, then I would look at the prior swing to determine the next following, the distance and the velocity of the next following move. I use the angle and the amount of price that, so this fell from 10,282 down to it's like $700, and it did so in a very short amount of time. So that's what I would use to determine a swing target, and then I would start penciling in a trend line like so. And this is getting ahead of ourselves, but remember, we're only looking at the 15-minute chart, and this could absolutely, when we're looking at the 15-minute chart, this is why. I'm not making a call here. I'm not saying that this is what with any degree of certainty that this is going to happen. I'm just saying that this is basically what makes most sense to me and what would be the most ideal move from here, because we did fall very sharp, very fast, got very extended from the EMAs on the shorter time frames, and then also the RSI is very oversold. Let's just take a look at if you bought every time the RSI was down here. Now, you heard me talking about before not thinking this was a time to buy the dip, but that's very different. I was looking at the 4-hour chart, and I'm talking long term. If you're expecting this thing to go above 11,000 when you're buying the dip, that's much, much, much different than if you are trading the 15-minute chart and you're buying this right here and selling it all right here. That's not buying the dip. That's just kind of scalping a little move, a day trade. So clarify myself there, but definitely take a look at how powerful the RSI is. I mean, it just calls bottoms. Like that's just what it does. Perfect bottom there. Missed it here. And that's where you look for the divergence. And you still go lower, so that would have been tough, and that's the type of stuff you expect to see on smaller time frames, but still going to be paying very close attention anytime it gets down around this area. Take a look at this. That's amazing. We got all the way down to an oversold RSI, and then this is the most bearish thing that can happen. What we're seeing right here is you hit that oversold RSI, you get the divergence. This is a bull divergence, lower low in price, higher low in RSI. And then the RSI goes all the way back up to retest the 50 area, the 50 territory, which is where it's neutral. It's not oversold anymore. And the price went nowhere. So that's like the most bearish thing that can happen. Definitely keep an eye out for this, is if price just consolidates sideways from here and the RSI in the 15-minute returns back to the 50 territory, above 40 anyways, then that would be very bearish and is absolutely an option that I think could happen. Like you've heard me talk about, the longer that volatile markets consolidate, the bigger the following move is expected to be. We've been consolidating this range for a long time. Therefore, I'm expecting a big move. So it wouldn't surprise me in the slightest if this did nothing but consolidate sideways while the RSI was able to move back into not being oversold. And also, it would allow the price to kind of get back to these EMAs. Look at how sharply this 50 EMA is moving down. If we just kind of follow that angle, we can see that we could consolidate. Let's see, right now is 2030, so that's like 4 hours away. If we consolidate for 4 hours and we don't get above 97.75, that would really make me think we're going to roll over and turn down, get resistance from this 50 EMA, let this thing get back up to not being oversold. And yeah, so definitely watching for a bounce here, but know that for sure there are multiple other options that could happen. So something else I'm going to take a look at is distance from moving average. I use this very similar to the RSI when looking for these extreme points after a big move. And let's see, when's the last time we've been this far? Let's go ahead and blow that up a little bit and make sure that so I do like simple moving average. I like both. Exponential moving average is more dynamic. It keeps up with the price more, so getting further extended from that is a bigger deal than getting overextended from a simple moving average. That's why I generally will use the exponential for this task here. So what we're going to do is horizontal line at this low to see when's the last time the price got this far away from the 50 EMA on the 15-minute chart. And we see it was right here. And we got that same thing that I was kind of just talking about, the most bearish possible situation as you consolidate sideways while you return to the EMAs, and then you have that next huge leg down. When's the last time? Right here would be the last time that we got that far away. So definitely something to pay attention to. There's a number of recent corollaries which show that potentially we should have found support above this area if the bulls were going to maintain in control. Getting this far away shows that the market might be getting a little nervous, and that is what happens when markets get oversold and there's people panic selling. You get really, really overextended for moving averages. Okay, so let's go ahead and don't need to look at the 1 second chart. See if there's anything we can see on the 3 minute. Actually, I wanted to pull up the ADX on the 15 minutes, so we'll go back there real quick. Why doesn't TradingView have the most popular one at the top? Like, this doesn't make any sense. But what do you do? Okay, so interesting here. This is kind of, yeah, the 3 minute is doing just what I told you is the most bearish possible thing, right? We come all the way, both for the RSI and the ADX. So let's first look at the RSI, how it came all the way down here. And now it's bounced all the way back to 50 without the price going anywhere. Watch for it to just kind of kiss off of that 50 EMA. This is a very small time frame, so I give it very, very little credence. But definitely we'll be watching for this action to find resistance around here with the RSI turning down at 50 as we watch. Very interesting. Keep an eye on that. And then that's the same kind of picture we're getting out of this ADX, right? It gets all the way to a point of an extreme. It's hard to see. Here's the last time it got to this point of an extreme was when we had this crazy action following the weekly close, which we were kind of prepared for. Those who were watching this stream, the weekly close was expecting some crazy fake outs around it, and we were watching for that retrace using Fibonacci's and whatnot. But basically, the last time we've had a move this extreme based on the ADX in either direction was back here. And now notice how, look how when the ADX topped on this roof here, and then the ADX rolled over, the price rolled over and came down, right? So it's kind of bearish, kind of neutral, kind of what you'd expect. It was pretty neutral until it fell below these EMAs. If it found support at these EMAs and continued, that would have been fine. But notice how much different that is from this picture in terms of ADX rolls over right in here, is coming all the way back down to kind of the bottoming area of where it's still a trend, but the price hasn't really had a counter trend move. It's just consolidated sideways. A counter trend move is the less severe option. If you've got a market that's moving 2 steps forward, 1 step back, 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's a lot different than it's like 2 steps forward, 1 step sideways, 2 steps forward, 1 step sideways. Now the 2 steps forward gets you much further because you didn't have to take 1 step back. So that's just kind of something to think about. Let's see what this ADX is telling us on the 15-minute. Just starting to top out. Ooh, this is a good time to check the Parabolic SAR, see if it's getting high and tight to the price. And I guess I just need to get rid of some of these indicators. They keep showing back up no matter how many times I delete them. It's kind of a pain in the neck, but what are you going to do? Parabolic SARs are another great way to determine exhaustion, and this is not showing exhaustion. This is showing plenty of room for this thing to go. The further the price is from the SAR, the less exhausted the move is, the more strength it has. Whereas, let's just look at the 3-minute. You see how up in here, we're feeling good, and then once it comes down and gets really tight, that's an exhausted trend. And you would expect a counter trend move or consolidation sideways. So this has a long way to go before getting tight to the price. And this is just very, very important to me. Let's go ahead and look at the weekly to show you guys what I'm talking about. So notice how, just notice how it's just unbelievable how powerful this thing is. We're just going to go through this real quick. It signals long 3,000, tells you to stay in, and then right in here tells you to hold on, hold on, hold on, hold on, hold on, and then finally right here is where the exit would have been, 12,699 or so, right below the low of this candle. That's where you would have taken full profit on a long entered from $3,000, and you would have entered a full short at 12,700. And then you would have looked at, man, this just moved from 20,000 all the way down to 12. This sure seems like it could be, an exhausted sort of correction ready to continue back to the upside. Parabolic SAR says, nope, look how far it is away from the price. So when we come down, this is the key right here, as the price continues to trend down, the SARs being way overextended, that leaves room for counter trend moves and for the trend to continue. Now, it didn't continue until you got a little fake out, like a 3, this would have been ideal if you didn't get this little fake out, but you get in and right out and then right back in, no big deal. And then same thing happens here where SARs are away from the price, telling us that there's nothing to worry about, nothing to worry about. And then as soon as they get really tight, now it's like, okay, time to pay very, very close attention. And then when they break, okay, we reverse our position. And then right up here, getting really tight, time to pay very close attention. Here, telling us there's plenty of room to go, okay? So this is just a absolutely probably hands down my favorite tool is right here, Parabolic SAR on the weekly chart. Very hard to beat this indicator. Go through every other indicator that you like using, back test it, and tell me how it matches up against the Parabolic SAR on the weekly. These are the kind of things I probably should be a little bit more keeping to myself, but we've got not too many people out there to have any concern that about sharing, my most important secrets, at least the large majority of them. Okay, so just wanted to look at the other time frames. 4-hour SAR says, plenty of room for this thing to go. Let's see, about like a 1 hour. I'm sure if the 15-minute was, and these will be as well. So yeah, Parabolic SARs on pretty much all time frames are saying that this trend has plenty of legs left in it. The ADX on the 15-minute is getting to a point of exhaustion. Here we are seeing some nice spread between those DIs. I meant to check that on the 4-hour. Sorry for moving in and back and forth and back and forth. Yeah, not in love with that action there. Would want to see a much wider spread, so that will make me want to pull up the just regular volume and seeing that we recently had kind of a 4-hour close, I think the 4-hour volume bars will be the most pertinent right now. Yeah, that's very significant. Okay, that doesn't. The ADX is kind of saying, yeah, watch out, this could be fake. The SARs are saying, no, we think it's good. Volume's saying this looks real. You know, I mean, this is real volume. It could, you know, it's often you'll get volume spikes that end trends, and then often you'll get volume spikes that begin trends. So I look for two sort of volume spikes, one that ends the trend, one that begins it, and that could be kind of what we're seeing here. This volume spike sort of ended this pump. You got a big buying pressure that the result did not match the effort, as Wyckoff would put it. So when you see something like that, where there's a ton of effort, ton of buying volume, but the result doesn't match, it kind of reverses. That's something to pay very, very close attention to. Could potentially be seeing something like that here, where we've got that volume spike to start this move, and this could be the volume spike that ends it. I don't think so, but something to pay attention to. What I would really be looking at is a volume spike equal to this, because really this is what started this down move. It A, ended the up move, and B, started the down move, this volume spike in here. So I'm always looking at volume relative to recent action, and that's where I would be looking at the spike which ends this move down. I would want to see it having volume similar to this. Notice how this wasn't just one bar. We've got like 4, 5, 6 bars of huge volume, bigger than anywhere else. That's what you would be looking for a volume spike that ends the trend, not necessarily what we're seeing right now. Okay, I think I have beat Bitcoin into the ground for the most part, and we'll want to look at some alts. So this is the first sort of bulge in the 4-hour Bollinger Band. I really don't use Bollinger Bands very often or very well, but something to go ahead and take a glimpse at. Ichimoku Cloud, we'll just go ahead and take a quick look at that. Not a whole lot to say on the daily. How about the 4-hour? Not a whole lot to say there either. Not really seeing C-clamps, which would show exhaustion. Everything's fully bearish, which we would expect. I would want to see this cloud like much thicker, as a matter of fact. The thicker the cloud is, the more likely it is to be resistance. And I'm really expecting, if we bounce to 10,000, for that to be resistance. And okay, seeing that this is thin tells me that for some reason the cloud knows more than I do. That's like for certain. And for some reason it's saying that this wouldn't be strong resistance if we bounced back up to there. I'm wondering what like the 12-hour would say. The 12-hour is starting to thicken up. That's what I kind of want to see. I want to see that and then it moving down. So we'll be paying close attention to that. But for me, when markets are moving, and my favorite tool is just basically any time that we're not just trapped in a miserable range, is going to be the Parabolic SAR, the 50 and 200 EMAs on different time frames, and then the average directional index, as well as the RSI. It's important to have tools to accomplish what you're trying to accomplish, but not to really confuse yourself by using multiple tools for the same thing, unless you have found that they complement each other very well. So for example, when I'm looking at the RSI spiking down to a major low, I do like to complement that with a distance from a moving average. That does help me to just kind of confirm what I'm seeing in the RSI. I find those tools to work very, very well together. When I'm looking for if a trend is exhausted, I'm looking for the ADX and I'm looking for the Parabolic SAR. That will also let me know if this is a strong trend or if this is an exhausted trend. That's one of the most important things for any trader to be able to consistently identify, is the strength of a trend. The trend is your friend until it is about to end, as Tom DeMark would put it. So you need to learn how to identify when is this trend about to end and when is it just starting. The TD sequential says the trend is just starting on higher time frames in terms of the 4-hour and the daily. It says that we are just starting a move. The ADX is in agreement. I think we forgot to look at that on the 4-hour chart. I knew that there was something. So ADX is actually saying that this isn't even a trend yet. This isn't even the start of a trend, that we are still in a range. So that is very, very important information. I would have definitely expected the ADX to break above 20 on this move, and I'm constantly blown away by how the ADX just knows more than I do. So let's look at, just wanted to look at the 12-hour as well. So that's interesting. It failed to find support. The ADX is really saying that we're going to find support here and probably retrace back up. This ADX is very interesting and is very different from what I was expecting to see. And anytime you have experience with an indicator and it is looking much different than what you were expecting, it's time to pay close attention, right? It could be time to learn. Okay, anything else? I do not believe so. There probably is, and we'll have to come back, but who cares? Let's go ahead and look at my favorite stuff going on right now. I was thinking about it today, and I think I've come to a conclusion, but I was wondering, what do I enjoy more, shorting altcoins or buying Bitcoin? That's a tough question. I got to go with buying Bitcoin. I mean, that's, you're really doing something when you're buying and holding Bitcoin. You really are. You're part of the revolution. This thing is a financial revolution, and that's a fact. So buying Bitcoin is absolutely like my favorite thing to do in the world. Shorting altcoins, that's got to be a close second. That is for sure. And like we have been watching, so we talked about using the RSI yesterday as a leading indicator for a boundary breakdown. And we also talked about using altcoins potentially for that. And I was actually very disappointed in what I saw yesterday. Yep, I think that's exactly how I had it drawn. And I was really happy about this close right here. That was the close of the daily, but we're looking at the 4-hour here, and this was the first 4-hour that closed below this trend line, which is the same kind of trend line that Bitcoin was consolidating. And this is the type of action that I love to see, when it barely closes below, but it clearly closes below. Like, I would not adjust this trend line. It just connects with all my touch points, with closes, and gets so many touch points that I would not be wanting to readjust this. A trick that I do sometimes is, if there's a parallel line where the wicks are tending to find support, is do something like that. But I wasn't even looking at that yesterday. I was looking at the first time we got a close below this trend line, and we barely closed below, but to me it was indisputable. That's what I love to see, because most people, it didn't matter to them at all if we closed at 185.39 or 185.82. Like, most people, that just makes very, very, very little difference. Almost no difference at all. And that's when I love to pull the trigger on entries that are signaled, because it's telling me that there probably aren't a lot of other people noticing what I'm noticing, per se. That's just how I look at it. Like here, clearly, this thing broke down, and unless you had an order entered, like a stop entry ordered to enter right around here, which you absolutely could have, and I absolutely do that as well at times. If you didn't have that on the books, you missed this. And now it's like, oh, okay, this broke down, but you missed it. So that's why I love seeing something like this, where it's like, to me, it's a clear breakdown. We clearly didn't miss it, and I don't think a lot of people are going to be, taken on this trade right here, right now. And that's also, I think, what we got out of the daily. Nope, we didn't get the daily close below. But then we got this kind of bounce in here for 12 hours. I mean, that doesn't look like much, but that's 12 hours of this thing not doing what I expected it to do. And whenever you get a close below a boundary line and the price immediately reverses, that is a very strong indication of a trap. So this was a great sign to me and was confirmation of the RSI showing that this boundary was going to break down. But this really made me feel uncomfortable about it all. Like, I just didn't like seeing that at all and was absolutely not wanting to see it get back above this Williams fractal here. That's why those Williams fractals are so powerful, is they really indicate the lower highs, where if you break a lower high, now you've got a higher high, and that's something that's very, very important. So right here, we just see that that is the lower high. We did get a couple higher highs back in here, both traps. That's going to happen, of course, but we really, if we do break this, so if we did get above this fractal, then this is what I would have been looking for, is a wick above, a close below, and then a reaction back down to the downside. So was paying very close attention to that. Stoked to see this thing break down. I mean, this is just awesome. Let's get a cleaner chart. Jeez Louise. Could be a full-time job finding a clean chart sometimes. Okay. So now let's take a look at potential areas of support. Let's see what we got. Interesting. Yeah, I think that this is a trend line that will be something to pay attention to. Ethereum loves trend lines and fake outs, that sort of stuff. It makes me wonder if this may be kind of a good median for. No, I don't like that. No, don't like the pitchfork, but man, it just seems like we got to be able to find some trend line in here, and I don't like this one. Maybe I do. It just doesn't seem quite steep enough for the move that I'm expecting to come. I like this one much more. And then what I would do is like something like this, maybe. Like this is where I want to see us get back in. Something like that. Yeah. Probably gonna have to wait and see on the trend lines. Focus on horizontals for now. And what I'm gonna be paying close attention to is 175. So notice on Bitcoin, this is kind of where $9,500 is for Bitcoin in terms of we haven't, at least as far as I know, taken out the low of that area where I said is the last stand. So that's what we're looking at now, is to see is Ethereum going to be another leading indicator yet again and show that Bitcoin will go ahead and break down that horizontal support. Remember, we looked at the RSI today on Bitcoin and saw that the RSI has broken down that horizontal, and now we're seeing that Ethereum has as well. That's basically the same exact setup for yesterday's symmetrical triangle or bull trend line. Basically the same situation where you've got the RSI leading and you've got Ethereum potentially leading as well. So what I would want to see out of Ethereum is for it to do that most bearish thing that I was talking about, where we consolidate sideways, cannot get above 175, let the oscillators cool off, return to the moving averages, and then get another dump. So let's take a look. Look at that beautiful resistance. Look at that beautiful resistance. Nice support, support, not. Beautiful entry there. Okay. So yeah, Ethereum's just, I mean, this thing's just such a joy to trade. And the only thing about it going down is that it may not be available to trade anymore. If what I want happens, it does happen. Okay, let's take a look. Like we see, those moving averages on the higher time frames don't tell us a whole lot. Here we do see that we are awfully overextended on the 15-minute. The RSI has started to turn back up as we are moving sideways. This is a pretty good setup for a bear div. Watch for this to kind of come down and retest right here before finally getting that correction while the RSI creates a higher low. Definitely keep our eye on that. ADX is absolutely getting to a point of exhaustion on the 15-minute. So that would make me want to confirm that with the TD, which it looks like that's probably already price flipping. Yep. Yeah, this whole move just came in like one candle, so you're really not going to get a whole lot out of the TD unless you're looking at like probably the 3-minute. And even then, didn't do a excellent job, but what are you going to do? Okay, so back to the 15-minute. We are looking at the RSI. Let's take a look at those SARs. Okay, interesting. Much different than Bitcoin. Bitcoin SARs are still way up here, and Ethereum's are down here. And just because the price gets high and tight on the SARs, which it's not quite, but it's sure getting close, that doesn't necessarily mean anything. You have to wait for that SAR to actually flip. I've seen time and time again where you'll get these, it comes down and it comes down and it starts just kissing off, and then you get that next dump without the SAR actually breaking. So just because they're high and tight doesn't mean it's time to do anything. You still have, that just means it's time to pay very, very close attention. So here it's time to pay pretty close attention. This tells me that I should be checking back in about an hour, or maybe setting alert at 173.86 would probably be a really good way to go about it, because if this thing does bounce, I think it's just going to be a tremendous selling opportunity. If Bitcoin bounces to 10K, I would be viewing that as a high probability. Depending on how it goes, I wouldn't, if it's just rallying straight to 10K, I wouldn't be selling into that. I'd wait for a reversal candle. I'd wait for a SAR to break down. I'd wait for some confirmation. But that is something that I would want to be paying very close attention to if we do get this bounce that goes back up to retest, let's see, 182, then that is a great opportunity as far as I'm concerned. And I don't want to be, I hate saying it's whatever. It's a great opportunity as far as I'm concerned. You have to decide for yourself what you are doing, and as long as you're following a strategy and being disciplined and sticking to a process and entering in on opportunities that really it's like everything's lining up, then if you're just consistently doing that, it's a game of volume. You know, there's sometimes you're just gonna get rocked. No matter how perfect the setup is, you're just gonna get wrecked, or you know, you're gonna manage risk properly, but you're gonna continue to lose and lose and lose. But if you stick to your process, you stick to your guns, and you continue executing, then you're just not worried about losing. You just know that it's going to happen. You just know that it's part of the cost of doing business. So that's something that I will reiterate time and time and time again. So this will be the sell box that I would be looking at. I've already got pretty darn good exposure to Ethereum on the short side, so I don't really think I'll be adding. But if I do, say, take a little bit of profit here, maybe 15–20%, and then everything goes good, maybe I'll try to put that back in at a better price. That's definitely something I'll be keeping in mind. What else do we want to look at for Ethereum? Let's see here. Let's just go ahead and zoom out a little bit. See, okay, now we're seeing, I knew that there's some sort of trend line in there. Here we go. Trend lines are always most easily identified on higher time frames. So keep that in mind. If you're having trouble identifying a trend line, zoom out and see if there's anything there. And I wonder if this can connect all the way up here. Almost. Almost. Okay. So you remember me talking about this really nice setup right here, which I absolutely took, and like I said, in a significant way, such that I'm not really even thinking too much about adding if we do get a perfect bounce. But why did I really like this? There were 2 times to enter into this position as far as I was concerned. Let's go ahead and start with the first. Boom. Breakdown, I guess maybe 3 times, 3 opportunities. And I think I missed this one because it didn't actually cross until we got a little too far away. So what do? Price crosses, price is overextended from a cross. What do? We wait for the first test of the 200, and that's, boom, where we enter. Okay, so there it was right there. And then if we're looking at also trading patterns, entering on this candle right here makes a lot of sense. Entering on this right here, this throwback, is even better. This is kind of that action I'm describing now, is, you know, you break it down and then you throw it back. That's the ideal entry. The breakdown is not quite as nice as far as I'm concerned. So, and then in here we've got another flagging pattern, which I absolutely was viewing as a bear flag, specifically on the daily. And that was occurring, I mentioned multiple times that I do not think this is too far extended from the moving averages. That is where it gets subjective, and that is where I want to do some work back testing that distance from the moving average indicator as it relates to moving average crossovers, so that I could get an objective, say, you know, if price is X percentage away from the moving average as it crosses over, then for sure you pass on the entry. Like right here, it's pretty subjective. This to me wasn't, it was pretty clear. We're close, we're forming a bearish pattern, and we're not, you know, they're not crossing after a big move happened. They're crossing on consolidation. So this was absolutely a great entry on this death cross. And then here, since this is confirming so far below, I would not be viewing this as the entry unless the stop order was entered back in here, which is absolutely can be a very good idea. And I am working on the BitMEX tutorial still. I've got 2 out of the 5 episodes knocked out, and I will make myself a note about stop entries, because I'm sure that's something that could help some people. It's just basically you enter an order that if the price gets here, it's going to open a position for you, and can be very useful such that you don't get left out on candles like this. But anyways, for this, I wouldn't be, since we got too far away from confirming this pattern, if we're just looking at entering on this confirmation of this pattern, I wouldn't do it. I'd wait for a throwback. If we can throw back to, like I said, my sell box here, that would be, you've got this trend line now, you've got this prior horizontal, you would have the 50 EMA. I mean, that's pretty sweet. Let's go ahead and take a look at ETH against BTC. I'm short that as well. I mean, I've just had a heyday shorting these altcoins. Right after Litecoin halved, I started shorting alts in a big way, and still have a good short out on Litecoin, as a matter of fact. So that will be interesting to go ahead and examine. Now this could be a really good spot. I've just been shorting the shit out of this thing. Every consolidation I've been adding, I've been so confident it's going to go down that even though I've had good exposure, I have still been adding every time we have consolidated and broken down. So right here, we broke this thing down, and it's not too far away. I mean, it doesn't look to me like that ETH USD, where it's really far away. So here what I would be looking at is, again, a sell zone, something like that. Yeah. Okay. If ETH BTC bounces back to 0.018, I believe that's a sell opportunity. Stop loss right in there. Stop loss would be what percentage? If we get there, you'd be looking at about a 2.8, call it a 3% risk. If you used that as a stop loss, that's the same thing, where if we retrace back into the middle of that range, strongly indicates fake breakdown. So putting a stop loss there makes a whole heck of a lot of sense. My target is still a 0.008. Let's just get an idea for what sort of risk reward we're looking at. Just because I have a target, it doesn't mean that you have to be very careful with when you're looking at risk reward. And know that only about 10% of your positions get into get to your target. This is something I learned reading Peter Brandt's book that stuck with me. That basically you're going to have a target, and there's like going to be three things that can happen. You get maybe four things. You get stopped out at a loss. You get stopped out at break even. You have a winner that doesn't reach your target. And then lastly, you have a winner that does reach your target. And the ones that do reach your target are much less likely than the ones that move in your favor, that you can capitalize on some profit, but they don't quite get all the way to your target. So definitely keep that in mind as you are looking at risk reward and that sort of stuff. So here we talked about a 3% risk, and looking at about a 55% potential reward if it does get to my target. So you're talking about like a 20-to-1 risk reward. Some people are going to have a problem with that, just saying that it's totally unrealistic. I couldn't care less. It's very realistic to me. One thing Tyler used to say that he got from Jesse Livermore is the further a market goes down, the more likely it is to continue going down. A lot of people think that the more a market goes down, the better it is, better buying opportunity it is, and I fully disagree. You bet with the trend, you bet with the trend, you bet with the trend until it is about to end. And this market has been going down and down and down and down, and when it broke through this horizontal here, it became a high probability, as far as I was concerned, for it to return down to that next major horizontal area of support, which is 0.008. And the more that this continues to move in my favor, the more I am okay going ahead and taking some big stabs at this thing when the risk reward is very much so in my favor, and the momentum is very much so in my favor, and the likelihood of reaching my target in my mind is, very significant. So therefore, I am absolutely going to continue hammering this thing. Let's go ahead and draw this trend line and something like that. See what we got here. Okay, let's go ahead and put in our favorite tools. Okay. Yeah, this is pretty neutral, which is very bearish. I mean, if we're moving this far down and you're still kind of neutral in terms of this isn't getting exhausted, that means it's a strong trend. I wonder if the ADX agrees. The ADX says not only is this a strong trend, this is a trend that just started. Love this. So this is a market that's been going down. The farther it goes down, the more likely it is to continue going down, and it is not showing signs of exhaustion from my favorite indicators. Let's go ahead and throw on the TD. Just taking out nines. And this is a great example of why I love the ADX and use it above the TD sequential for the most part. Is we get a weekly 9 here, that's a big signal from the TD. I mean, a weekly 9, that shows that we should get at least a 1 to 4 candle correction. ADX says not happening, straight up. When this thing is in this territory, this is telling you that this trend is going to continue, and that even a 1 candle correction would be kind of weird. You know, maybe we'll get a 1, maybe a 2, but really we should be expecting this to continue when the ADX is at such a strong point. Let's go ahead and take a look at the daily. Amazing. Daily hasn't even started to trend yet. Whew. So that this shows me that we should expect a bounce, a throwback to 0.018 when the ADX is like this. This shows it would be perfect for a bounce back to that 0.018, which is my sell box right there. I know it's small, but we'll zoom in when we can. If we bounce back there, and then the ADX continues rolling up and then crosses 20 right as it looks like we're rolling over and finding resistance at the sell box, getting, say, like a Bill Williams fractal, kind of like this, right in here, where it's like you bounce up and then you roll over. If this happens on like the 4-hour while the daily ADX is crossing 20, that would be huge confirmation that this thing is ready to just basically start a trend, which is kind of wild. 4-hour says plenty of room to go. This is kind of a first area to worry about, but I'm not seeing much support in here, so I would definitely be looking for it to get up to here, which suggests that we still have plenty of room to go on this move. RSI isn't bottomed out even on the 4-hour, which is interesting. ETH BTC ready to dump. Watch for the 50 EMA to roll over and kind of line up with this trend line, kind of like so. And then you have that same confluence of resistance on ETH USD in terms of if we bounce up to here, you've got a horizontal, you've got a trend line, you've got a moving average. Can't ask for a whole lot more. You may even have a SAR. Now that SAR is starting to accelerate after this extreme point, increased the step, and it will start accelerating down. So I would expect that to get broken if we do get a little bit of a bounce here, but maybe not. Maybe we just kind of bounce quickly. It could just happen in the next couple hours where these SARs are still up here. So, okay, anything else to look at on ETH BTC? I don't think so. We are definitely over an hour right now, but like I said, this is the best time to learn, and I can't take for granted these opportunities to analyze charts in real time during volatile markets. You wait months for moves like this. I mean, we literally just waited months for the market to start showing signs of life, and now the storm is a-brewing. Okay, so we're just going to go back to, well, let's pull up where I entered short. One of the best setups that we have seen in a while, which is kind of what we got out of Ethereum, is this sort of lower high action, something like this, and price pulling up and into a death cross. I mean, this is as good as it gets. You can't get any better. Look at that. Pulling up and into the death cross. And then kind of like we saw in Bitcoin, finds support, gives us a head fake. But that's where, you know, a lot of people had their stop losses wiped out right in here. But we didn't because we were using the moving averages. And then the trend line broke down. Kind of same thing with Ethereum in terms of you get this little close below, which not a lot of people may be paying attention to, but I'd be watching like a hawk, and then boom. Beautiful. So that is where I am short. I did add in here, my average cost basis is 114. right here. And I'm just holding on to this thing. I mean, I've got no reason not to. There is so far for this thing to go down, and so little that makes me think it's going to continue, that it's going to reverse, that as long as these moving averages are in a bearish crossover, I am going to be short Litecoin. And again, this would be the kind of sell box. Let's make that a little bit better. If we do bounce to retest 70, could be a good spot to go ahead and enter. This is much more of a descending triangle than Bitcoin was, so this is definitely much more bearish than Bitcoin, which makes sense because of all the hype leading into the halving. So that would give us a target of 63 and change. Did it already get there? Almost. Okay. So let's see what we got here. We're going to go ahead and pull up the daily, where this is a situation that is tricky. If this got the death cross while you're still consolidating inside the bearish pattern like Ethereum did, then great entry. Here, you know, I would only be selling this if it bounced, specifically because we know that 50 is historical support. So let's go ahead and pull that up. Ooh, good to know. 200-week moving average at 61. Interesting. Interesting. I wonder if we're going to get the first death cross ever on a weekly chart in crypto. I don't think there's ever been a weekly death cross in crypto for a USD pair. There have been for BTC pairs, but I don't think there's ever been a weekly death cross in crypto for a USD pair. And the fact that Litecoin did nothing for, I mean, this is a big move. Okay, it went from $30 to $140, and it really led the whole market. I mean, this led the whole market, and this is what caused the bottom. And as far as I'm concerned, why I missed the bottom is because I didn't account for the Litecoin halving and the potential for Litecoin to go ahead and lead the whole market out of a bear market, despite all of the other indicators I was looking at telling me it should continue. So this is something that I've definitely learned a lot from. And what I'm looking at now is that this action, the halving's over. You know, you buy the hype and you sell the news, and that's clearly what happened. And now that the halving's over and all the hype is gone, and now people are going to start focusing on Bitcoin as it gets closer to a halving, I'm just thinking this is going to get a death cross. And if it does, we're looking at, like, I mean, I would have no problem giving a target for sub $5. That's way ahead of myself right now because we're still ahead of these moving averages, and this really should be support. But the fundamentals tell me that if we were unable to create a new all-time high leading into the halving, that there is a very good argument to be made that this is the highest price Litecoin will ever get to, ever. I am pretty comfortable with that. I'm not going to say that, like, make that call right now, but I'm giving that some serious thought. I mean, think of it, Litecoin just had a halving and didn't even really threaten the all-time high. I mean, more than 50% below the prior all-time high. Okay, moving forward, let's just take a look at BTC pair. Oh boy. Oh boy. This could be a really good opportunity, like, as we speak. Again, you have to decide for yourself. Let's see, it looks like I've already got the lines drawn. I wonder how these arrows did. Ooh, we got no bounce into the death cross. we just consolidated sideways, most bearish option. But notice how my target got hit perfectly. I mean, this arrow I drew back on July 8th, 2019. Let's see, that would have been, I don't know if I was doing shows then or not, or if I was taking a break, but we see that I drew this after this candle here. This was probably right after the halving, or maybe right around there, and I was looking at it close and seeing this death cross coming in on the weekly chart and thinking a bounce into it would be a great way to sell. And then I was looking at this horizontal after a potential consolidation or counter trend bounce. I had obviously determined that right here was a area for the price to reverse, and I bet I saw a bull divergence in the RSI and a number of oversold indicators. So I thought that, okay, we've got some horizontal, here's a good spot to go ahead and bounce. And since that didn't happen, that is very bearish. That says that there's just a lot of supply and, you know, not a whole lot of demand. So now that we have reached this target, let's go ahead and look closely, because this actually might be offering an opportunity. Okay. Yeah, we'll pay very, very close attention to this. It looks like it might be trying to wick below and close above. We've still got multiple days until, and it sure looks like this thing is ready for some sort of counter trend correction. Maybe we see that that LTC USD is getting very close to the 200-week moving average and some major support from like $50 and $60. So that may indicate that it's ready for a significant little correction, bigger, more severe than Bitcoin, which would allow the LTC BTC pair to correct. So yeah, I would be myself staying away from this right now, especially because I'm short Litecoin USD. I wouldn't really need to. I think that there's still a lot to watch out for, and just seeing this huge down move with nothing. Like, I was expecting a counter trend move there and we didn't get it. So now at the next horizontal support, I would expect an even bigger counter trend move. And that's often how markets will really screw with people, is that everybody's here taking profit and buying and going long, expecting at least a little something. And then when that doesn't happen and you take out these lows, now everybody's freaking out. They're covering those longs. They're selling. And then that's when the price goes ahead and makes an even bigger move, which now really screws with people, and they think, well, holy cow, now it's really taken off. So that is definitely something that I'm seeing here. And let's see if we do have a divergence in the RSI. We do not. So I'm not sure what I was looking at back in here. That maybe it's like a daily div is probably what I was looking at. Notice the ADX finding support at 20. That's actually very interesting and rolling up. That suggests that this shouldn't happen. And I'm just putting this in a dotted because I'm not making this call. I am just saying, that this makes a lot of sense. Be prepared. So I put that in dotted. This tells me that we should just continue downwards, because if we were going to stay in this kind of range and find support here, then what you would expect is this ADX to fall below 20. So ADX has really been working hard lately and coming up with some very interesting results that are very important to pay attention to. So right here, watch for this to break down and these DIs to diverge. RSI kind of agrees, still room to go. How about the SARs? And if this is going too long for you guys, just feel free to log off and either come back later or don't. It doesn't matter. This is meant to help you during these, stressful times, the times of volatility. It's good to do little bit more in-depth shows. So the weekly SAR is kind of agreeing with the ADX, saying that, you know, we're far away, plenty of room for this trend to continue. Okay, last thing I want to look at is XRP. It might be given some opportunities as well. Wonder who has the longest history for XRP. Probably a shitcoin exchange like Bitfinex. Okay. So this was a symmetrical triangle that I called in real time on Twitter. Been following it for quite some time now. Let's see if we can get a decent view of it. Okay. So was expecting major volatility to follow these barrier breakdowns. Let's get an idea for what sort of measured move we could have. Here we use the percentage because if we use the dollar amount, it would take us to well under zero. So we just use the percentage of minus 74% from 28 cents. Let's bust out the calculator. Okay, from 28 cents, 287. So 0.287 times 0.26 is 0.073, which I have gone ahead and called for a return to 5 cents on XRP, and the measured move from this symmetrical triangle is very close, coming in at 7.3 cents. So let's take a look at why I called for 5 cents. We need to find an exchange with enough history. So I would expect basically first dead cat bounce from 15 cents. Again, the longer markets consolidate, the more drastic the following move is expected to be. This market has been consolidating for a very long time, and if it breaks to the downside, moving from 23 cents, 25 cents to 15 cents simply is not enough of a move. And I don't know why I'm having so much trouble with TradingView today, but if it's not one thing, it is another. So to me, that just isn't what I would be looking for after this prolonged consolidation. But what would make sense, and this is a call, this is what I'm expecting to happen. So these lines are not dotted, but they're going to be so small to see because it's stinking. I don't know what is going on with TradingView. And I'm sure it's the Indian, not the arrow, but what are you going to do? Okay. So there we have it. I'll probably tweet that out so everybody can get a good look. But just seeing, okay, we've got this trend line. We've got the, so, right, like so. Falling to 15 cents from here, and then bouncing back to retest the trend line and throw back to prior horizontal support at about 24 cents, resisting there, and then pulling all the way back to here is absolutely what I'm expecting to happen. I think there is, the SEC is building a case against them as well. From what I haven't done enough research, and I really should, but from what I've heard, they are wanting to have a nice scalp. They've taken some really small cap shitcoins, and really nobody gives a crap about, pun intended. They've gotten a couple of those scalps, but that just doesn't matter. That doesn't make headlines. Nobody cares. If they can take down something like XRP, that makes headlines, and that could be, there could be an ambitious guy at the SEC who is smelling what XRP is stepping in, and they're ready to go ahead and make a name for themselves, and that would be awesome. And so when the fundamentals and the technicals line up, that's when it's time to bet big in general. Bet big, relative to what you can afford to lose. And seeing that potentially we have the SEC coming in and building a case against these guys, and seeing that horizontal support is breaking down, and also seeing that from a bigger scale, it looks like Bitcoin could be pulling back. Well, this is a trend, a call that I'm, fairly confident in. I'm a macro trader for the most part. I swing trade, and I try to go for the big moves and look for big moves like Ethereum from 0.025 down to 0.008. That's a big move that it's hard to, you're not going to generally nail those big moves. You're generally, something's going to happen along the way. But this is a big move that I'm pretty darn confident in it playing out. So while we're at it, we might as well just zoom in. And if I remember, I think, let me check if I've got affiliate links. I don't have affiliate links. I'm going to try to upload, try to remember to put in affiliate links for where I trade XRP against USD on margin. I do that on evolve.markets, so you can just go ahead and go there yourself if you want to support. Look in the description for an affiliate link. Basically, they're very similar to BitMEX, where it's anonymous. You just need an email to sign up. You can deposit Bitcoin or Litecoin as margin, and then you can also trade traditional markets. You can trade indexes, you can trade currencies, and then they have a good offering of alt versus USD, which is pretty rare to be able to trade alt versus USD on margin and on leverage. So that is especially with Bitcoin as the collateral. So that's a really good option, and that is on a MetaTrader platform, which after I get the BitMEX tutorial together, I will plan on doing one for MetaTrader as well. Okay. I think Poloniex might have that option of, I think that's one of the sites where you can margin trade alts versus USD, but I'm not sure. Okay, so not a whole lot to talk about other than watch for that ADX to cross 0 on the 4-hour. Could be confirming this pattern on the daily. Damn, I missed this right here. That's sure a sweet sell signal, huh? Oh, that's beautiful. Can't get them all, and you definitely do want to limit when there's all these opportunities all over the place. You need to have some sort of control. You need to be able to manage the positions while they're open. You can't just go around and take, like there was a lot of entries available in this area, and potentially XRP would have been a really good one to go for, but you can't get them all. And right here is definitely an interesting spot where it doesn't look like it's too late, and it also looks like it's just now confirming this pattern here. This doesn't look like a flag because there's not much of a sharp, you want a steep pull, and so this is just more of basically a symmetrical triangle, which when I see a symmetrical triangle, I expect continuation of the prior move. Prior move is bearish, so I do expect that, and that definitely could be providing an entry there. Take a quick look at XRP versus BTC and call it a day. I mean, shoot, I should probably be taking a look at the stock market and gold, but that might just have to wait for tomorrow. Yeah, it's almost certainly going to have to. Okay, ADX crossing 0 on the daily, suggesting that this needs to consolidate before continuing down. And boy, has this thing been getting wrecked. Here's the other symmetrical triangle that I was posting in real time that was just very, very well defined with an enormous target. And notice how once that broke down, holy cow, that's a death spiral. Got a great entry on the death cross. And I mean, look at this thing just dumping. And this, man, this is just amazing. Okay, so we're going to take a look at these accelerating trend lines, because after that broke down, now we've really kind of started to accelerate. So let's see what we got. I wish that ADX wasn't crossing below 0. This isn't really an accelerating trend line. Let's see if we can just use 1. Here's where it kind of tried to accelerate down. Here, okay. So that ADX crossing 0, that's unfortunate, because this would be where you'd expect it to roll up at 0. If we were going to, you create lower lows and then you get a counter trend move, whether it's consolidation sideways or a bounce, and then that's where this trend line comes in. Is every time that we've bounced or had a counter trend move, it has basically petered out at this trend line. And that's kind of what I use the ADX to illustrate, is that if we're just getting a counter trend move, then you would really expect this to find support at 20. It didn't back here. Notice how it did fall below 20, and this is where altcoins I really do dislike, in terms of they really move so fast and so sharp, and they're so volatile that a lot of times the indicators that I've come to love so much just don't quite catch it. And this is a perfect example where ADX falling below 20 right as price should be ending this counter trend move. And that's what you'd want, is this stays at 20 and tells you that, okay, that's just a counter trend move, and it goes back up. So maybe it's not such a big deal seeing it cross 20 here, because this is right where I would want to see this thing reject. You've got a symmetrical triangle leading into this trend line. If this trend line holds as resistance and then this triangle breaks down, that could provide a pretty interesting entry. Next target for XRP BTC. Is about 1,250 sats. That's a 50% move from here. So a lot of the targets on the altcoins, specifically against BTC, the measured moves or the next areas of support are very much like a 50% correction from here. Could be a storm of brewing in crypto. I certainly think there is. I am working hard to make sure that I'm positioned correctly, and that I am also not complacent, that I am making sure to protect unrealized profits and to adjust stop losses. After a big move happens, when the market moves in your favor and you start to really get excited about the unrealized profit that you're seeing, or you're feeling juiced up because profits, your position moving in your favor. When you feel that, that's the key to think about, okay, where's my stop loss? Is it time to adjust it? When you're really feeling excited about your position, that's when you need to think about managing risk and adjusting stops. And I'm just going to one more time just take a look at Bitcoin. We've had such a long show that a lot could have happened with Bitcoin in the last hour and a half. Might as well pull that up. That top screen is all screwed up. So just quick look to see what we got on Bitcoin, if anything has happened in the last hour or so. Nope. just continue to consolidate. Are we potentially forming a bear flag? If this forms a bear flag, that would be great for my position anyways. Keep an eye on that for sure. And if that breaks, then still could have an option like this. You want it to kind of like so. All right, well, that's everything that I got for you guys today. I am going to stop the screen share. I'm going to thank everyone for tuning in. I didn't have a chance to keep up with the chat, but thank you all for chiming in. I will do my best to go ahead and look back through the different comments to see if there are some good questions that I can touch on next episode. We've got a great hashtag, gay for TA. I like that a lot. That's pretty great. So that will do it. Thank you everybody for tuning in. Let's keep a close eye on these markets. Let's make sure we're protecting our profits if we're in them. If we are not and we're feeling a little bit panicky, let's make sure to learn from this experience, and let's also make sure to cut losses. It's up to you to do whatever you want, but definitely consider cutting losses sooner rather than later if you're really starting to freak out as a position's moving against you. If you're feeling fully confident in your position, then more power to you. Definitely do not let me talk you out of anything, and I will certainly plan on catching up with you guys tomorrow. We'll look forward to taking a look at some charts again then. We'll catch up with you later. Okay.